Hello everyone, this is the last video from valuation of share. So we need to do one question from fair value method. We already done net asset method, one yield method. Now we are going to do through fair value method of finding value of share. Okay, the formula is simple. Fair value method is equal to net asset value plus yield value divided by 2. Okay, this is very simple. Now question is like this from fair value method. The following is the balance sheet of Mr. Tenjing Ltd as on 31st December 2020. Okay, so liabilities are given, assets are given. So liabilities, share capital 40,000 shares of rupees 10 each, that is 4 lakh. General reserve, workman saving account, profit and loss account, sundry creditors, provision for taxation. Asset, land and building, machinery at cost, less depreciation. So they have reduced the depreciation here. Then trademark, stock, debtors, cash, preliminary expenses. This is fictitious. Okay, some adjustments are there. Okay, the machinery is worth rupees 2,40,000. This is market value of machinery, so you need to take market value. And land and building have been valued at rupees 4,80,000. Okay, this is market value by independent valuer. Okay, and rupees 16,000 of the debts are bad. Okay, so from the debtor side, from 1,76,000 debtors, this 16,000 is now bad. That means company won't be able to receive this. There is no any expectation, there is no any hope of getting back this 16,000 rupees. Okay, that you need to reduce from debtors account. Okay, then the profit of the company have been as follows. Profits are given 2018 this one, 2019 this one, and 2020 this one. This one is 1,60,000. Okay, this is the 1,80,000. This one is 2,12,000. Further, it is the company's practice to transfer 25% of the profit to reserve. So whatever company owns profit, so 25 of the profit company transfers to its reserve. And ignoring taxation, find the value of shares. Okay, similarly company similar companies give on yield of 10% on the market value of their share. So yield is 10%, return is 10%. Similar companies in the market, they give a return that is 10%. Okay, so goodwill may be taken to be worth rupees 3,20,000. This goodwill is not written in your balance sheet. This is just given in the adjustment, but also this have to be considered while calculating later on. Okay, so you have to calculate the value of share through net asset method and yield method as well as fair value method. Okay, so we are going to calculate the value of shares through first net asset method, second yield method, third one is what? Third one is fair value method. Okay, so net asset method, as you already know, value of share is net asset available equity shareholder divided number of equity shares. Okay, number of equity shares we have 40,000. We just require net asset available for equity shareholders. How are you going to calculate that? Calculation net asset available for equity shareholders. First you have to write all the assets as market value. Okay, since this first one is what? Land and building. Okay, land and building adjustment is given 4,80,000, so we are writing 4,80,000. Then machinery, this one is 2,80,000. Here they have written 2,40,000 market value, so I am writing 2,40,000. Then trademark, there is no adjustment, straight away 40,000. Stock straight away. Okay, debtors, here they have written 1,76,000. Out of that 16,000 is bad, so when I'm deducting that, so when you deduct 16,000 from 176, it will be 1,60,000. Okay, cash, of course, 1,04,000. Okay, then preliminary expenses, as this is fictitious one, so you should not write here. Okay, then anything is there in the adjustment you have to see. So one thing is there, you can see goodwill may be taken to be worth rupees 3,20,000. okay, since we are doing asset, so you have to consider this. So I have written goodwill 3,20,000. okay, when you total it, it will come 14,40,000. 14,40,000. okay, you have to write here. okay, then less liabilities, less what? Liabilities. You need to deduct liabilities. okay, when you see here, this one is share capital. This is not third party not liabilities. This is not third party liabilities. This is shareholders fund. General reserve is not third party liabilities. This is also shareholders reserve. okay, workman saving account, this is employees money, so this is third party liabilities. You need to deduct this. Profit and loss account is also, that comes under share capital, shareholders, so this is not third party liabilities. All the third party liabilities you need to deduct. Workman saving fund, sundry creditor, this is third party liabilities, and provision for taxation is also third party liabilities. So we have got three things to be deducted: sundry creditor, provision, and workman saving fund. okay, so in that way we are deducting these three things. So when you total this, it will be 3,76,000. when you deduct it from the asset, it will be 10,64,000. so this is net asset available to the equity shareholder. Had it been the preference share dividend and preference shares claim, we would have deducted that, but there is no any shareholder this thing preference shares, so straight away this money is for equity shareholders. okay, 10,64,000. so value of share is net asset available to the EHS, equity shareholder, divided by number of equity share, that is 10,64,000 divided by 40,000 is your number of equity share. It comes 26.60. so this is the value of each equity share. okay, under net asset method. So now we have to solve this same problem through yield method. okay, yield method, which method we are taking. so dividend method or earning method. There is nothing written dividend, so we have to take rate of earning method. so this is the formula. okay, you have normal rate of return, paid up value of share is there, you need expected rate of earning. okay, expected rate of earning, this is the formula. okay, so we are going to find out expected rate of return. So value of share is the expected rate of return, this thing. so expected rate of return is profit available for EHS, equity shareholder, into 100 by paid up equity share capital. okay, so we have to find profit available for equity shareholders. so profit available for equity shareholder, how are you going to find? First, total past 3 years profit you have to add. okay, so as we know that we have got 3 years profit. okay, these are 18, 19 and 20. you need to add all those things. 3 years profit, it comes 5,52,000. okay, now we have got one bad debt. One bad debt is there of 16,000, that you need to deduct before bringing average. okay, so less bad debt 16,000, it comes 55,36,000. after this you need to divide by number of years, that is 3. so it comes average profit, that is 1,78,667. this is average profit. okay, so after this, if the company has the trend or anything like they have a what, they have given something practice, they have a practice to transfer 25% of their profit to the reserve every year. so that is given in the equation. see, it's a company's practice that to transfer 25% of profit to reserve, so we need to transfer that. okay, from average profit. Average profit is this: when you less transport general reserve 25% of this, so it comes 44,667. okay, then when you deduct it, it will be how much? 1,34,000. So this is profit available for equity shareholder after general reserve. If question asks to reduce taxation, then you have to reduce that also, like 10%, 20%, if they have asked. But in our question, there's nothing like tax and all, so you need to ignore that. So this is profit available for equity shareholders. Okay, 1,34,000. So you got the profit available for equity shareholder. Now you can bring expected rate of return. So profit available for equity shareholder is 1,34,000 into 100 divided paid up equity share capital was how much? How much? Paid up capital is 4 lakh. Okay, so when you multiply or cut this thing, it will be how much? 33.5%. so your expected rate of earning is 33.5%. so now you can bring the value of share. Value of share is the expected rate of return into paid up value of share divided by normal rate of return. So your expected rate of return is 33.5. Normal rate of return is 10%. okay, here it is written similar company yield 10%. this is normal rate of return. okay, so this is 10 into paid up value of share is how much? Paid up value is, I think, 10. This one is 10. okay, so when you cut this 0 with 0, it will be 33.5. so this is the value of share, 33.5 per share through value of share through yield method. okay, yield method. Now in the similar way, you can find the value of share through fair value method. That is simple net asset value plus yield value divided by 2. okay, so you need net asset value. How much was net asset value? Earlier we found that. How much is net asset value? See, value of share through net asset is 26.60. so you have to write 26.60 plus how much is the value of share through yield method. We have brought that also, 33.5. so 33.50 divided by 2, so it will be 30.05. this is the value of share through fair value method. So hope you understood that. This is also very simple. So this is the last video from valuation of share. Please try more and more questions from your side as well. Please don't depend upon teachers only. You have to practice more and more to excel yourself in this chapters. okay, thank you very much.